Standard Bank has grown annual headline earnings by 27%. That has high interest rates helped to offset rising bad loans. A stellar performance from the firm's Africa regions also helped, with that segment of the business now accounting for more than half of the group's banking profits. On the bad loan side of things, credit impairment charges increased by 22%. This pushed the lender's credit loss ratio up to 98 basis points, which is close to the upper range of its target of 100 basis points. The bank says its clients are likely to remain constrained until interest rates start to decline, and credit impairment charges are likely to peak in the first half of this year. But CEO Sim Chabalala is confident about Standard Bank's prospects, saying that while uncertainty is expected to remain elevated, he believes the business is diversified, growing and resilient, and so the group is on track to deliver on its 2025 targets. Exaro shareholders have made bank. The coal miner has declared a special dividend. This will be paid out in addition to a final dividend. Combined, investors will receive R15.88 per share. That's as the group has built up nearly 15 billion rand in cash savings. This comes despite a tough year for the company. Exaro faced low coal prices and logistics challenges during 2023. And this is reflected in the group's full-year headline earnings per share, which fell 22%. African Rainbow Capital Investment says it's delivered a resilient interim performance. The company has posted a 4.6% rise in its intrinsic net asset value. That has several factors such as load shedding, port backlogs, high interest rates, elevated inflation and exchange rate volatility put pressure on consumers and constrain the growth of some of the group's entities. But ARC Investments believes the diversified nature of its portfolio is ultimately what allowed it to post some growth. The firm has stakes in Time Bank, Rain Crops Group and Alex Forbes. Woolworths has selected a new chief executive to run its food business. Sam Ngumeni will take up the position in July. He is currently the group's COO. Ngumeni replaces Zyda Rylands, who steps down as Woolworths Food CEO after 29 years at the retailer. Under her leadership, Woolworths developed a better cold chain than competitors, and she ensured that the division was a top performer within the group. Famous Brands has announced a changing of the guard. The restaurant owner has appointed Chris Bull as the chairman of the company. This will take effect at the group's annual general meeting in July. Bull takes over from Santi Botha, who is set to retire. Factory bosses are in the doldrums. ABSA's first quarter manufacturing survey shows that business confidence dipped 5 points to 21. This is well below the long-term average of 37 points. The negative mood is largely due to power cuts, challenges at South Africa's ports and political uncertainty. And there isn't much hope for an improvement in confidence levels. The survey suggests that weak consumer demand is fueling manufacturers' pessimistic outlook regarding expected business conditions in the next year. South Africa's banking sector will lose about 74 billion rand in unpaid loans this year. That's according to S&P Global Ratings. This means that credit losses in the sector will average 1.4%. That's as consumers and businesses grapple with the broader economic tremors shaking the country, such as high interest rates and elevated inflation. Further afield, Apple supplier Foxconn said it expects revenue to increase significantly in 2024, following a slow start to the year amid booming demand for AI servers. Let's take a look at this report for more.
iPhone maker Foxconn has had a slow start to the year, but it believes things are about to turn around. The Apple supplier said it expects revenue to rise significantly this year. It credited booming demand for AI servers as one factor after it posted fourth quarter profit that beat market expectations. The outlook has turned brighter since November, when Foxconn said it had conservative and neutral expectations for 2024. The Taiwanese company said October to December net profit jumped a third on the year to $1.69 billion. It saw strong demand for AI servers and increased sales during the peak year-end holiday season. Consumer electronics, including smartphones, made up most of the revenue. Foxconn is the world's largest maker of electronics for other brands. It now expects sales for the first quarter to fall slightly from a year earlier. The period is traditionally quieter than the fourth quarter when it races to supply goods for the Western year-end holiday period.
And the European Union's Parliament approved the world's first major set of regulatory ground rules to govern artificial intelligence. Here's our reporter Darling Lachela with more of the detail.
That's right, Zinati. EU lawmakers have passed an AI-related law, putting Europe at the forefront when it comes to regulating artificial intelligence. And joining me with more is Exaro Mikechi with Deutsche Welle. Now, Exaro, thanks so much for joining us today. Let's just start right at the top. Just take us through the details of this law.
Thanks for having me. Lawmakers in the European Parliament voted overwhelmingly in favor of the Artificial Intelligence Act. This comes 5 years after those regulations were first proposed. The AI Act is expected to act as a global signpost for other governments grappling with how to regulate the fast-developing technology. The co-leader of the Parliament negotiations on the draft law, Dragos Tudorake, said that the AI Act has nudged the future of AI in a human-centric direction, where humans are in control of the technology. Big tech companies generally have supported the need to regulate AI while lobbying to ensure any rules work in their favor. OpenAI CEO Sam Altman had caused a minor stir last year when he suggested that the ChatGPT maker could pull out of Europe if it can't comply with the AI Act. Altman then backtracked to say there were no plans to leave in the first place.
And Exaro, how will this AI Act work?
Well, the main idea of the Act is to regulate AI based on its capacity to cause harm to society. The higher the risk, the stricter the rules. AI applications that pose a clear risk to fundamental rights will be banned. For example, some of those that involve the processing of biometric data. AI systems considered as high risk, such as those used in critical infrastructure, education, healthcare, or law enforcement, will have to comply with strict requirements. The Act also creates provisions to tackle risks posed by the systems that underpin generative AI tools and chatbots such as ChatGPT. These provisions would require producers of some general-purpose AI systems to be transparent about the material used to train their models and to comply with EU copyright law.
Lastly, what's the EU's next move? What happens next?
The AI Act is expected to officially become law by May or June after a few final formalities, including a blessing from EU member countries. Provisions will start taking effect in stages, with countries required to ban prohibited AI systems 6 months after the rules enter the law books. Rules for general-purpose AI systems like chatbots will start applying a year after the law takes effect. By mid-2026, the complete set of regulations, including requirements for high-risk systems, will be enforced. Violations of the AI Act could draw fines of up to 35 million euros or 7% of a company's global revenue. Meanwhile, Brussels will create an AI office tasked with enforcing and supervising the law for general-purpose AI systems.
Exaro, let's leave it there. Thanks so much for your time and those insights. That was Exaro Mikechi from Deutsche Welle.